Welcome to my channel. I'm the cover call guy. My goal is to create $120,000 per year passive income using only cover call ETFs. Right now, my portfolio yields about $72,000 a year, about $6,000 a month, and about $1,400 a week, almost $200 per day. Legal disclaimer before we start this great video today. This content is for informational and educational purposes only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions on my own and may be incorrect. Trading and investing involve risks, including loss of principal. Please always do your own research and consult a licensed professional before making any financial decisions. Remember, I'm just some random idiot you found online and I could be completely wrong. Now, with that out the way, today's video is going to be why JEPI is the new SCHD. As a true SCHD warrior myself, when I went to growth, I believe that its time is over, right? So I believe there's a new era, there's a new wave, and for those that have a SHD, oh, what a tongue twister that was for me. For those that do hold it, what do you think? It used to be like the largest position in my portfolio when I was a growth investor. I truly believe it was the method behind it was amazing. But I think the new era and new times has shifted, and going from quarterly dividends to monthly dividends is the new wave, right? So you can have a whole bunch of quarterly dividends, but waiting every 4 months is just not it. Is I need income every month consistently, reliability, and also it can just sustain as much as SCHD, and I believe that ETF is JEPI. All right, tell the tape the key metrics between the two, right? So SCHD standard versus JEPI the challenger. Income source is corporate dividends versus JEPI options premium plus dividends. The yield for SCHD is about 3.8 to 4%. JEPI is about 7.2 to 8.2. Frequency of payout, SCHD is quarterly, JEPI is monthly. The beta for 3 years, SCHD has 0.72 high sensitivity versus JEPI at 0.53 low volatility. So it's much more defensive. And then a sharp 3 years is a 0.18 versus 0.67, better risk adjusted for JEPI. Tax efficiency, however, SCHD does win in this, is high, it's qualified versus JEPI low ordinary income just because it is a monthly payer. All right, the contents, right? Let's start with the post-ZIRP era, right? For over a decade, the search for yield was binary, accept zero returns in bonds or take equity risk and dividend stock like SCHD. And then we have now the paradigm shift, right? The normalization of interest rates and resurgence of volatility created a functional migration. Investors moved from corporate cash flow harvesting, which is dividends, to market volatility harvesting, which is option premiums. Right, the explosion of option premiums income is now, I believe, the new wave, the new era. It is just only going to get bigger, bigger, bigger. Right, SCHD is the new JEPI is the new SCHD, except it pays monthly. Right, so this report validates this comparison by demonstrating how JEPI has unspurred SCHD's role as the primary liquidity engine. The VRP advantage, which just means volatility risk premium, the tendency for implied volatility, IV, which is option pricing, right? This determines the option pricing and how juicy the premiums are to exceed realized volatility. The mechanism behind this is that JEPI sells out of the money, OTM, calls options on the S&P 500 via ELNs. The cycle behind this is that in bear markets, fear spikes, right? The VIX rises, options becomes more expensive. The result of this is that JEPI generates higher income exactly when stock prices fall, acting as an automatic stabilizer. So pretty much JEPI, and for most cover call ETFs, sells the fear, right? That's when options and premiums spike, right? It is counter cynical because it's a cycle. As you can see in the chart here, it's a cycle. It spikes, then comes back down. Spikes, comes back down. SCHD, the fundamental fortress, right? So that's the nickname a lot of people give it because it is pretty much the fundamental defensive um, ETF. You buy this because of its how defensive it is. All right, the fundamental screen behind this, SCHD doesn't just buy yields; it buys sustainability. That's why it's so loved. That's why there's a whole community behind it, because the method works. All right, looking out 5, 10, 15 years, 20 years, it works. All right, cash flow to total debt, return on equity, dividend yield, and 5-year dividend growth rate. The outcome of this, a portfolio of bond proxies with upside. By executing REITs, payouts are primarily qualified dividend income, making it a tax efficient compounding machine. That's one of the biggest pros to this is qualified dividends. So if you don't know, I believe if you're in the United States and American, if you're single, you get up towards almost $50,000 in qualified income, so you paid zero taxes on it. If you're married, almost basically doubled, right? Almost $100,000. So basically, if you make upwards of $100,000 in qualified dividends, your tax rate would if effectively be zero. You pay nothing. And then if you make over it, then it goes from 0 to 15 and so on and so on, and you just pay whatever above that 100,000. JEPI, the volatility harvester, right? The structural hedge. JEPI does not track the index, right? It is a defensive slave. Targets stocks with lower beta than the S&P 500. Uses ELN overlay, monetizes volatility to generate monthly distributable cash. The outcome, it is a somewhat a synthetic yield. It allows exposure to non-dividend paying growth stocks like Amazon while still generating an 8% yield through options. The exclusion problem, the problem of SCHD is that strict yield requirement create a barrier to entry for major tech growth stocks, but we have seen this entire year of 2025. If you don't know, 2025 has basically exposed SCHD, right? In the raging bull market, it did. In fact, in the raging bull market, the stock went down, right? And and if it continues to go down the next year, then we're gonna start seeing NAV erosion for SCHD. All right, so if it's consecutive next year, if next year we're still in a choppy market, kind of bouncing up a little bit more up than it goes down, that means SCHD is not growing. It's starting to erode its NAV. So 2025 has been a rough year for SCHD. Well, hopefully, the SCHD gang kind of watch this video and maybe think towards of buying JEPI. And not necessarily have to sell as SCHD, but maybe buy JEPI to kind of complement the quarterly payout, the tech miss out, right? Because tech has been on the run and SCHD is, quote unquote, the value, right? And they have a metric, right? They only choose like certain companies with at least a minimum of 10 years of paying dividends, growing the dividends. So it's computer based, rule based screened. Right, the consequences is that zero exposure to the Mag 7, like I mentioned, Microsoft, Nvidia, Amazon, and tech-led rallies. SCHD significantly lag the market or even goes down while the market is going up. Right, the solution to this is JEPI, decoups income from stock selections. Right, tech-heavy slave can hold Microsoft and Nvidia for growth. Manufactures 7 to 9% yield on them via options. So about almost double to triple the yield of SCHD, which is why I think it's a great complement or the new SCHD that pays monthly, right? Because it holds basically. I'll talk about what it holds in the stock comparison, but SCHD, like what if the tech rallies goes for another 3 years? What happens then? The holdings, the defensive core overlap, right? So this is what you see in what they hold in comparison, right? Top holdings in both SCHD prioritize growth, JEPI values low beta, right? So it holds Coca-Cola, quintessential defensive, floor for SCHD yield, stability for JEPI, adds diversification via snacks, low volatility plus high FC8 F, right? Free cash flow. Verizon embraced for high current income and utility-like behavior. Consumers cycle, right, that behaves defensively due to duopoly status. Geopolitical hedge, right, government-backed revenue creates predictability. Holdings, the tech hedge, right, JEPI exclusive. So now you're adding JEPI to it. Now you're holding the JEPI exclusive for the tech hedge, right? Microsoft, right? SCHD excludes low yield. JEPI monetized volatility for income. JEPI uses for consumer beta for Amazon. Right? ELN monetized high IV of the S&P 500. Nvidia, this is what was crucial. This is what killed SCHD. JEPI captured the AI exposure. SCHD missed this entirely. Right? SCHD stock would have been like 30, 35, 40 plus if they just had Nvidia and a little bit of Microsoft, Google, Amazon, right? SCHD would have been like up at least 50% by now, but because they missed the AI boom entirely, they completely missed it. And this is why this is one of the drawbacks here, right? Mastercard, Visa, you have fintech growth, right? Too low yield for SCHD, perfect for JEPI quality, and of course Costco, right? It's the ultimate defensive growth. SCHD misses low yield, JEPI captures it. And now holdings, I quote unquote the old guard, right? SCHD exclusive. Remember they rotated out of oil, I believe, and this is what also hurt them, right? Chevron, the cornerstone of SCHD. JEPI holds minimal energy, inflation hedge, EOG, shale production, highly cynical, excluded from JEPI low yield, and then tobacco, right? High yield, declining volume. This is the cornerstone of what you call old economy, right? That's the oil and cigarettes. Then you have Ford, of course, the legacy auto, high yield but high cynical value trap. And then fifth, third, regional banking exposure to commercial real estate risk. So regional banking is it's much small banking, but it holds pretty much these olders banks that have been around. Holdings, the supporting cast, JEPI, NE, next era, renewable utility offers stability plus green growth tailwinds. And then of course AVGO, Broadcom, critical holding, AI infrastructure plus dividend growth, a bridge between value and growth. And then we have Helmet, HWM, aerospace super cycle play, jet engines component, Yum Brands, right? Fast food franchise Reliance, KFC, Taco Bell, Burger King, the global model. Real world return, November 2025, year to date, JEPI just destroys SCHD. 3-year annualized, JEPI way ahead of SCHD, right? So it's either going to start replacing SCHD like I'm going to mention here, my whole video, right? I think JEPI is going to be the new SCHD, or for those SCHD holders, you might want to use JEPI to at least complement to pair up with JEPI to pair up with SCHD. Because if you don't, if you just stay these true growth, I don't know. I think it's going to be an issue here. I don't think the tech the tech might have a drawdown, but it's definitely not going away. Um, it's only advancing so much where everything we need is tech led. Everything. I mean, ugh, think about it, right? Oil, gas. A lot of people are not smoking anymore. Even with the vapes, people are going away with it. So it's a new era, and I think JEPI is bound to kind of overtake SCHD. JEPI itself is already proven to be very very defensive. It can grow, and it pays monthly on top of that, right? The only thing is now that yes, it uses ELNs is kind of their specialty, right? So if they switch over to a Section 1256, is going to be very tax efficient. So what makes that difference up is that tax. That's it really. And once JEPI does that, game over. Drawdown production, right? 2022 stress tests. JEPI went down about 18.3%. SCHD went down 21%. So how defensive SCHD is be known, JEPI still did better. Of course, we have to talk about the liquidity, right? SCHD is the volume king at 8.4 million shares per day, 230 million. Um, Lower turnover, right? About 30% reflects passive buy and hold nature, while JEPI is still highly liquid, 4.9 million, just about half, right? 280 million plus liquidity. Higher turnover at 178, 72% reflects active option rolling and defensive trading. So the higher turnover here doesn't reflect that it's bad. It just means that it's doing its thing. Is actually profiting from the yield and from the option trading to make that yield. All right, tax scenario, high earner. So SCHD, right? The investment is 100,000. Marginal tax rate 45.8%. SDHD gross income 3,800. Tax rate 23.8%. Right, qualified dividends. Estimated tax bill 900. Net spendable almost 3,000. JEPI gross income 8,000. Tax rate 45.8 is ordinary. Estimated tax bill 3,600. Net spendable 4,300. The result, even with a punishing tax rate, JEPI delivers 50% more spendable cash. Insane, right? Think about it. You're taxing me at almost double the tax rate. I'm paying for about 3.5 times more of the tax bill, and I still have double more spendable cash. Now imagine if JEPI were to change their strategy to be more tax efficient. I mean, why even hold SCHD? And of course, there are subscribers that have the Roth IRA. So I'm gonna talk about this investment again. 100,000, tax rate 0, right? So and you can look at it here in the tax shelter. JEPI generates over 2x their income. Absolutely demolishes SCHD. Demolish. No, there's just in every scenario I've tried. I mean, JEPI just absolutely outperforms. The modern hybrid 50-50 split combine them to capture the tech beta of JEPI and the value beta of SCHD. Like I mentioned, right? Not necessarily have to sell off SCHD. You can combine them. Nothing wrong with that. I think that's a great model. But for those who are just SCHD and just 100% of your portfolio, I think that's a wrong move. Now you get a blended yield of 5 to 6%, moderate volatility, exposure to both AI economy and industrial economy. So you get best of both worlds. Now you get paid monthly with extra juice every 4 months, right? That quality payout. The undisputed king of cash flow, right? SCHD buys the past, which is value. JEPI buys the future, which is tech and volatility. In a high rate world, waiting 3 months for a check is obsolete. I don't know. Maybe unless every 3 months that check is like 40 grand, then you might be able to survive the next 3 months without a paycheck or anything. But man, waiting 3 months for a check to be paid out, absolutely not. JEPI just isn't an alternative. It is the upgrade for the monthly bill payer. For immediate liquidity and drawdown protection, JEPI stands alone. JEPI is the undisputed king. All right, compared to SCHD. Undisputed. And that's it. Join the income evolution. Did you enjoy this deep dive? If you did, like, comment, subscribe. If you're Team JEPI or Team SCHD, let me know below. I appreciate you guys watching. I just felt like there's a lot as a former SCHD holder myself, and I know there's a huge growing audience of SCHD. I just want to make this video saying, hey, look, there are better options out there, and if you really love SCHD but can't wait for a quarterly payout, JEPI definitely complements SCHD. Think about putting it and pairing it together. I think JEPI is the new SCHD. Why not have SCHD 2.0 and combine them, right? So hope you guys liked the video. Catch you guys in the next. Stay tuned.